So we're now 15 minutes. We said sometime, because another challenge most of us have is that when you add indicator to your chart, you now want to depend on indicator. That's why we have problems sometimes. We will not be able to find a trade. And then before you enter a trade, you'll have been too late, okay? Now, if I still step down to 5 minutes, maybe you want to find a very quick entry and all of that. Now, so this market, like if you look at it, I told you that the market has been struggling uh, and returned below this. This resistance was 4 hours high. Now, if you look at this 5 minutes again now, there's another point down here. And now if you look at it this week, since last week and this week, you know that the market was boring, all right? The crisis and so many other factors. Generally, market was boring, okay? Not only, I think Bitcoin just move up, like when I was saying on Sunday, how we're going to move. And I entered and I said, the moment we cross above that 100K, then the journey can continue up move. And that's the up move we'll be making. Now, so this guy here, now when if you are even confused at the point, because this market, what it ought to do is that having rally here is to return back to this origin and reject for you to be selling. Yeah, that's what you need to wait for. So if you sell from here, you are targeting here and here as your take profit. Now, sometimes some people sell. If you sold from here, you are not wrong because you have a first, a fake out and then retest. And that was a very nice one, ordinarily. Now, what you now probably want to look at, I told you people about MACD, which shows you momentum. The only challenge is that now it's still above zero, but already kind of selling as it were. Now, and I've told us that sometime when you're looking at the market and the market itself is not showing you a very good direction, the best way for you is to just avoid that market and look for another one. So we're looking for this guy to return up here, and I'm going to be shorting. Now, this is the point I want to show you guys. Now, when you short a market, for instance, let's say when the market come back here, your first target is that you're looking at chances where if the market invalidates and then that become a known and void, that's where you are putting your stop loss. Now, this is your stop loss, 13 pips is the stop loss, 1:2. Then 1:2 is actually below this. That is to say, can come to sweep liquidity there. Sometime when it return back there, may not sweep liquidity appropriately. And if you see that just sharply reject, then you probably want to close the trade, because if you just reject or sweep liquidity and never hit your take profit, then it could bounce. Okay? So now sometime too, we always rush into the market just because you see market was going this way. You jump in maybe with this candle, and then this market need to pull back to really consolidate and confirm. Then you are now shouting, oh, I've entered the market and market is pulling back, because you are impatient. And that's one of the things. So Euro USD we're waiting for here. So let me just check another instrument very fast. Okay. I think the same card they are playing, GBP USD, Euro USD. Okay. I think gold have been struggling. Anyway, I was capping it all through, but it was delicate for me to give to a newbie because it can smash you out and finish your account. So I was capping it so massively. Okay. If you go to 1 hour and you see on my 5 minute and 15 minute time frame, I have this marked for gold. Before it broke this point, I was capping buy, sell. And then when finally broke this, I was looking for a sell to this point. Okay, so what do we have on gold ordinarily? Let's look at the 4 hours, for instance. Here you can see that gold sold down, broke this my trend line over here before I actually move it today. Has to say, gold was striving to wreck down until we have this bounce. So if we have this bounce, which is still correlated to this, then where do we go from here? Think of this. Okay, so for our candle, so we're having, this is like a total displacement. Total displacement, so that means we should be having good returning up. So if I want to find an entry, let's step down to 1 hour. You see that there are no serious momentum. So if I go to 1 hour, probably 15 minutes, because so the challenge I have here, this is where now you now have to mine what we call imbalance, is that the market's just revolving and so sluggish, which means chances are there can for it to as an imbalance, for instance. So if gold pull back to 3311 or actually fill all this gap for you to be buying. So if there are no good entry point for gold today, you're just today, you just probably expect that gold should pull back tomorrow market opening or tonight market opening and fill this gap and probably sweep this liquidity. That will make a good buy for you. Outside that, gold will still continue to sell because if you look at the trend, it was moving. Okay, somebody is asking a question. Good evening, sir. How do we know a pullback that is, especially when you show an entry? Okay, and that's why normally your market must be marked when you come for the day. Okay, a pullback that is highly expected. Two things about pullback is this. Yeah, for the fact that we expect this market to come down here, that doesn't mean it cannot rally up to this point. Now, a market that is sure to pull back is number one, a market that have broken a structure. After a structure is broken, you expect a pullback before the continuation. Number two, a market that move and didn't balance its book. But when book is open, trading is maintaining accounting book, opening and close. So because it's a give and take. When somebody give, who take it? And when somebody take, from where? So when only one person decided, that means the book was not balanced. And then the market will still go back there to close that book that was open. That's where we have those imbalances and all of that. And we have said 3 candles make this imbalance. So, but I didn't want to go to detail about that. So when you now have that retracement, and that's why sometimes most of us jump into the market early. And then when the market is now retracing to fill the imbalance, you will have been wounded with a heavy drawdown and eventually you close it. Immediately you close the trade, the market now go the direction that you actually face. But you can't bear the loss again. It's already obvious. And of course, you don't even know what you were doing part time. Let me go to where we have more instrument because this one now, okay. Okay, I said it's the same thing. Okay, so let me go to other instrument that we have here. I remember those of us who are doing challenge account, I told you that I said be careful with NAS 100. But I think US 30 is easy for you because I think the volume is more maintained or sustained. Okay, so like I told us, that your indicator moving average or whatever is just to back your trend. It's just to back your trend. I traded this guy today, and that was so amazing. And very simple. If you look at all of these, my lines, this was the market today, a new day open. Those of you who have been following the strategy I taught us of when market open, and when you mark market return break above that point, you want to find an entry. So here we go with this guy. If we check on 4 hours, you literally see that this guy had been doing massive things since about 3 to 4 trading days and all of that. So what do we have? So we're breaking all of those major points. That means this market still have chances of up continuation. So to continue moving up. So what should I do at this point? Now, the only thing I can do at this point is to wait for this guy to break this point and retest, or better still, return back to this place. That will be looking for a buy. In a nutshell, it's still a buy opportunity, as it were. I don't think I was even on gold long because it was taking some small move. Let's look at it. Maybe when I sold. Okay, like some of you asked me of the Akases scanner. I don't normally go there most time, all right? But still can so we can compare and contrast with my custom scanner on my trading view. So remember when you hear about scanner, it's just a customized they're just mere customized indicators that's just written to suit. So sometimes some of those indicators can be too clumsy. Oh, USD chef. Scanner is saying sell, but say it's not a strong sell, which is supposed to have like minimum of 2 or 3 points to confirm the strength of that sell. Let's look at it on our own scanner. USD chef. Maybe that one we're going to buy. USD chef. Oh. So USD chef is actually building a momentum for more buys. So US 30, I told us still going to be buying. So let me look at the USD chef with the scanner. So literally there's no strong momentum on it, right? But instead of selling, this is already proving that we should be having some buy eventually. But for the buy to be actually strong, we have to take out this high. And this is where people miss some trade. Instead of me waiting for this high to be taken, I take a snapper entry and all of that. So let me look at it very quickly. USD chef. USD chef. No, I'm not a fan of currency trading. All right, so look at it. So USD chef like going down to have a round return. It's reversal. So this is what happened here. USD chef, for you to have a strong buy, here we have, this was the high. So this high ought to be taken out because this is the high that produces this low. So the high that produces this low ought to be taken out, then for us to be looking for a buy. So this place now look like a low trading zone because this has not been taken out. I'm sure that's why that scanner is still showing like a sell, right, on the Akash scanner. Now, USD shelf, I told you this US 30 is still strong, right? That's it. This scanner to still show how trending it is. So for me, it's just to look for a pullback and buy to it again. Okay, so can see what I said. Like me, if I want to do what I can just do is to take small positions. I think that's USD chef, yes. So DSY, is he actually finding its way? So it's so boring, no volume, and that's one of the issues you could have. If not, eventually USD chef is to be buying, right? So if we enter into such trade, can dilly you. So for me now, since a currency, if I want to enter into it, to what chance can we have DXY strengthening tomorrow? Like I told us, DSY, okay, I think gold has finally even given a buy. Where was I checking it here? Good, good, good. All right, so it was buying since before we actually came to the market. That's buying since here. This cannot pick it. That's been buying from here and almost getting to that resistance. So that means so almost getting this is a major resistance for it and already pumping showing a selling or a limit. Let me look at, sorry. I was in the market before we start this training, and I think I was buying. Wow, wow, wow. It's amazing. I didn't even know. It's good. So like this now, that already shows the kind of signs of buying, but it's sluggish. So even if I'm going to be buying here, that means I must be ready to wait for it, whatever thing he wants to do. And no any liquidity down below it that will be afraid of to an extent. If it failed entirely. So I can be moving a more moderate wide range. That's 18 pips. It's not big. So targeting 1:2, that will be here, which is right. This is swing high. So except and if otherwise, DXY continue to get weakened. And that's the only time that's the only time you probably can make it. Because look at it, we're having DXY to have a support here. So if tomorrow we can have a bounce on DXY turning up here, so that's USD chef. But if we
I've
enter
told you
USD,
anytime you drink water. Who drank water here? Who ate here?
so USD chef, I can say okay, USD chef, just to play around it. Oh, network, what's going on? Okay, sorry, let me go to the other page. So impatient can really cause a lot of problem for us. So I said gold can actually continue up, which is more or less forming a chart pattern. I don't trade chart pattern to that extent. Don't touch chart pattern. I have time to trade because sometimes when people are trying to trade M pattern, when I will have taken from the on top of the left hand of the V, and people will be waiting for the other side and all of that. So if gold actually break this point, that means it's going to avoid this one to continue moving up. So, but for scalpers, we'll have taken some money because, like I told us, the scanner had shown the entry all this while. Okay, so we're marking this guy. It has refused to come up, and me, I will not short it. I will only wait for it to come up and reject so that I can find appropriate entry for selling. Okay, I want to check USD Chef. Sorry, I need to log into this stuff. I think it's refusing. Okay, let me check where I can log in a place here. USD Chef. Woo. Just a moment. Just a moment. I want to log into USD Chef. So I say it can be slow, but when we have, if we have, what they call, if we have this guy coming up tomorrow, that is TSY moving up, then USD Chef can give us money. So let me log in so that you can see what I try to do. Just a moment. I wanted to log into this. I think sometimes the network can disturb it. Oh, shit. I cannot use this one here. A moment, please. I want to log into an account and set a trade on that USD Chef. Like I told us, sluggish. So unlike gold that actually moved from, so for this my scanner, the more it opens this mouth, the stronger the trend tend to be. And that's, although for scalping though, and that's exactly what's happening right now on gold. So USD Chef has not gotten the momentum required to actually move like gold did. But the only thing is this, so US 30, can see the the more opened, the stronger the, sorry. So if you take an entry now, that means you are looking for a small entry. If no ideal entry is above this point and retest. So if I'm taking an entry down, so accept that, just know that it's going to be very sluggish, right? 22, 1:2. So this exactly at this swing high. Now, but nevertheless, you can always trail. So those of us who are having small account, I wanted to log in, but this application is giving me. Okay, so let's see if I can log in here now. Okay. All right. I want to show you. So sorry, I'm going to share a different screen right now. I hope I can see where this one is being shared. Okay. Where is this? Okay, okay. It has even started reacting little by little. I didn't know. So when you have a very small account, it's like $500 account, USD chef, maybe 0.02 or 0.03. So sometimes it depends on, I told you people when you are looking for a trade, you can see that it's very sluggish, that you must have set your, what do I call it? You must have set your parameter or your strategy. So ordinarily, I told you it's going to be sluggish. Now, so already know that below here, right, 80325, 80325, modify, stop loss, 80325 or something. So set the stop loss first. Okay. I think it's moving small. I'm surprised because it's supposed to be very sluggish. 325. That means since we're talking, we'll find an entry. Right. So now 1:2, I showed you on the screen that I said, so even without that, so let me go to 15-minute time frame. So you are looking at this point, for instance. So let's look at it. So this is a swing. Now, sometimes when you are targeting the major swing itself, can come below this. Let's duplicate this one. Copy, paste somewhere here. So, but this movement, the strength of this movement can only happen when the DXY is going to have its own journey, okay? if the DSY is going to be trending. Just using this as example, and I don't know how many of us bought into Bitcoin. That's on futures. Most time I like to enter my Bitcoin futures, and because I can leave it as long as possible. And I rarely use stop loss on my Bitcoin future trading. I rarely use, sorry. So I rarely use because I use cross margin. And that's why I don't use on I don't use kind of what will I call it? I don't use too much kind of leverage. I can enter a trade and I'll forget it literally. Okay, so USD Chef, you can see when I told you that my scanner already shows that one can go on with USD Chef, but just that it lacks reasonable volume. So, but for people who are following, and that's why I say when you're trading and maybe you're scalping and all of that, you take one instrument per time. For anyone who was following it, perhaps find an entry over here. The scanner already shows a buy, and now I'm trying to show some kind of little strength. But whatever strength is showing, you need to take out this high. Once you take out this high, the next target is this. And then that's why now, if you're trading ordinarily for people who are trading it before us, will have been in profit by now because that should be, for instance, take from here to this, that's about 9 pips already or something. But you can see that it's very sluggish. Okay, very, very sluggish. So gold is approaching where it may sell because the strength is weakening gradually. Okay, so let's look at GBP JPY. It was not actually trending, perhaps. AUD, okay, AUD USD. So you can see that USD is actually trying to gather strength now. So let's look at AUD USD. So these are already in with small positions. Maybe at the end of the day, when it closes, can just give like maybe very small money, maybe like $20 or so. Now, remember what we said our goal is to have minimum of 500 people that can be making from $20 to $200 every day if you are disciplined anyway. When we mean every day, that's when you trade, because sometimes market may not be too nice, and so you don't force yourself. So, but there's some days you may make more than that. You can now say, okay, this is my target. Now, when you come into the market, if you look at GBP, JPY, so somehow very choppy. Okay, this is 5 minutes, 15 minutes. So looking at 1 hour is still bullish, but you can see even above your 50 moving average. So what should we be looking at on this market? We should have continuation. Yeah, we should have continuation. AUD, okay, USD. AUD, USD. USD CHF. Okay, that's the one we entered the small position. USD CAD. Okay, so let's look at the USD CAD. Okay, so let's look at USD CAD, right? Oh, excuse me. Amazing. So USD CAD, the only thing is that here, so USD CAD, this was a low, a high, a low, a high, a low, a high. Now this low, sometime it came to sweep this liquidity, and that makes this one now be the recent low and the high here. So that means this guy is buying. Let's go to 1 hour to an extent. So you already have an established swing low here. that was created by this. So we should have the market travel to this point, which is a waiting. This is a waiting resistance. Okay, now you probably miss it, right? This is a waiting resistance. So if it's a waiting resistance, so what we want, now we're going to step it down. This is a swing high, this is a swing low, this is a waiting resistance. So what will happen? Are we going to have the market get to a rejection point? So let's look at 15 minutes. So you can see that in 15 minutes, the market was already actually brewed up, which perhaps on your 15-minute time frame, by your market structure, this was a nice one. Look at it here. This is the high, good, that brought about this low. And this low, make another high and a higher low and break structure. So you should continue to ride over here. So, but the only challenge is that, do we have any left untouched or unmitigated point? So here, this was touched into. So that means this market should be traveling to this. Or you can look at different liquidity area, which is on here, and that will form my first take profit, perhaps. Let's go here. Yeah, if we step down to 5 minutes, your 5 minutes, you're already above your 50 moving average. So this just like the market so sluggish, right? Maybe I would say that there are no volume in the market, perhaps. So now, sometime when you are waiting for market, there are things you want to do that are very simple. First, you want this market to actually retest this point before you buy. In most cases, the market, when it's going to gain momentum, may not wait for you. So on that note, you divide what you want to use in entering the market into two. All right. So instead of entering at a goal, let's say you want to use 0.04, then you first enter 0.02 and wait for the pullback to happen here to find an entry. So in other words, you're looking for a buy on, so it's already reacting to that. So perhaps looking for a buy from here and targeting this point. So sometimes your risk reward with more than 1:2. So this is the median swing low. Now this is about 1:3. So, but the better thing for me is to wait for it to pull back to this point, and I'm looking for a buy opportunity. All right. Now, if I check, that's USD card. If I use my scanner, oh, okay, AUD USD. Okay, that one was selling. Yeah, so I will have, oh my God. So USD card. So where is it? This is it. Aha. So can see the scanner already giving a buy opportunity. Not here, but this is the crossover, which was here, and that was a nice one. Now it's approaching the resistance. Too many resistance ahead of it. All right. So, but better still if you crash down to this point and finding an entry. Jumping it now, no, it's wrong. Probably wanted to pull back before you find an entry. Okay. So I was checking USD. Is it AUD USD or something? Aha. So it should be selling. Can see AUD USD. That was amazing. Now, sometime when your moving average is confusing you, you can hide it so that you see your plain chart as much as possible. So if I just go to like my 4 hours or 1 hour, depending. Now, this is a very confusing range market. Can you see? But there's no market that your support and resistance strategy does not trade. So invariably, I'm seeing a kind of demand zone down here. So that, okay, this point down here. Man, if there's going to be a favor, if things are going to favor US dollar today or tomorrow, that's going to give us a very nice selling opportunity for so many market that has moved very well. Now, so let's go back from this point here. Do we have any correlation? This can now be an external liquidity for it. But so here we are. The beginning of it, before all of those fake outs start happening was here. Okay. So if it was here, so the only thing that's going to wait for it and wage it is this. So we're going to go to 5 minutes trade, 15 minutes. We have no issue. So go to 5 minutes. You know, this kind of market can be very boring. So now, ordinarily, for you not to have a boring experience, you probably want the market to break this point and you are selling from there. But sniper entry trader, what do they do? Right now, this point is like no trade zone, right? A break below this point, confirm you're selling. And then sometime before breaking that, you can retest here and sell down massively from there. So sniper entry traders, we just check, do we have any kind of imbalance left behind that are not being mitigated here? The answer is no. Okay, I think we could have one here, which align with that line itself. And then that's where probably you want the market to travel up to that point. So, but some traders, if they come and they know that the distance to this is not much, see what they will do. The same way I told you, they're going to DCA here. And now, of course, stop loss above this point, which is still within a good range. And then it's going to be targeting the demand zone down. Now, so targeting the demand zone down here. Now, there's something you need to know. All of these points are liquidity area. So where is more obvious as PV point, and that's definitely this point, right? Any other point before that point, of course, this is another very, very important point. So that's why you see when I send signals, sometimes you see I put a line. That's to show you that I said find your take profit there. So now what happened? Having said this, as long as the market trade, when it return back here and reject, you want to add more position. If it does not travel there, if you break this one and then retest, you want to add to your position. So this is like a little position in because you were not there to have monitor all of this. But even if you're there, this market will have been so boring for you. That's one thing you must understand. Okay. So where's this? Where's this? So let's look at our USD chef, right? You know, we enter USD chef. Okay, sluggishly moving small. Let me check my own. I think I should have made $1. Very small money, right? That's a little drop of water, you know. Okay, I'm having 99 cents. Okay, $1.05. Now, so on a good day, if you are trading it, of course, I'm not going to be using 0.02. Concurrency, the least I use 0.05. Although depending on how much you are trading with. Okay, but sometimes in a short distance, it's good to use reasonable lot size so that you can close the trade in good profit. So USD card. So you see what I told you guys, that you have to patiently wait for it to return back to this point. So imagine if you jump in here, now when it's traveling down to actually retest properly, then you will be fidgeting that the market has left you behind. So I'm sure all of you entered the USD chef. You know, I remember telling us when we're starting that I'm sure all of us have our account opened. Yeah, because that is a practical experimentation. And I'm sure that's why a lot of people do not enter Bitcoin on Sunday when I was doing more detailed analysis on Bitcoin. And I said, as long as markets just find a close above 100K, then we're good to go. And it did that, which was somewhere here. Look at it. It's Bitcoin. Yeah, that was amazing. Told us this black line. I'm sure if you were on Sunday with us, I said it only return back to this yellow line. And as long as it close above this black line, we have no problem. And that was when I entered from. I think I entered $100,000. And then the long position now is still open. We're just contending with this. Once we're able to break this, of course, all through this week, it's going to be small sluggish. Those of you on private mentorship, there's a voice update I sent, you will see there and all of that. So patience is very, very important when you must
Which one, sir? Which of the update?
Yeah, I sent it I sent it on the added to that private mentorship Word document that's on Google Form.
Oh, okay, about 3 days ago.
Uh
4 days ago.
I updated it, was that yesterday or whatever? Yeah, I think I updated it. Now, so you can see Bitcoin, like where it's contending with that place is here. Once able to break that 107,000, then we'll now go to that 110,000. So, but imagine now when I was talking on Sunday that the moment we cross 100K, you find about how somebody was asking me about pullback the other time. Why is it certain that some pullback will happen? Look at it, there's an imbalance here. For instance, if you look at Bitcoin here, and you can see that the market came to feel it. And once the market come to feel a kind of imbalance, it gives more strength for its movement towards that direction where it's going to. Okay. Euro USD, I think we have done something about that. So for me, Bitcoin, it looks scary to a lot of people that day, last weekend, but that's what it is. And this is the style. The strategy is very simple. When you are trading either future, currency, synthetics, and all of that, I've always told us, when you make the money, buy coins. Many don't know. Many will think that, okay, because I know how to trade, when I make money, nothing is happening. I can tell you, if you are not buying coin, you are just on your own. Okay, so USD card. Okay, you can see now, the market has returned to where we say, and still struggling bullish, bearish. So, but if this candle now close bullish, you are still okay. Or, yeah, it has to just close bullish. It's going to buy up. And so, because the next target is here. Okay. So another instrument is this. If the DXY is going to make it, right? If the DXY is going to make it, then chances for this guy, even if it will still crash, because we have like an imbalance over here, and probably layers of it. Now, let's check to what extent can this market travel back to. So it's still now aligned with this. So anywhere here, and which here now align with that imbalance. So the question is that if I look at it from where it is now, but it's supposed to cross this for you to take it serious. So you have about how many pips is this? Wow, I think the USD JPY now a very big volume. It's going to travel here. That's 108 something pips. If it's going to travel there anyway. So that means we need to take out this high. And so we have a lot of limitation over this guy. So, but this high is supposed to be taken out. And more beautifully over this, but at least if this one is taken out, when you enter, you take this, retrace down, then you can still be okay. So that means potentially if you write down USD JPY, you can write it potential buy, USD card, all right? Anything USD card, USD chef, all right? USD SND, then they should be giving you potential buy. That is if the DSY is going to gain the momentum. And so any of those USD card, so USD card, you should be looking for buy. USD chef, we already bought. Okay. Already bought. AUD USD selling. Okay, so you can see what I told you, that I enter small, and if you bounce back, I add, which is this here. If you break this point and retest, add more position. This is my TP1. This is my TP2. And if you can travel down here. Now listen, for the fact that you are looking at TP1 here, once it crosses major milestone, your risk management requires you to now mitigate them. What do you mitigate? The market has crossed a reasonable milestone. You need to adjust your stop loss to follow, so that even if the market is going to do otherwise, you're already protected. That's one of the things most of us don't do. And that's why I always recommend that you don't enter one position. You enter many positions. And remember, those of you who have been following, how do we say you will do that? To say it, you have to go to babypips.com and you go to position size. All right, go to babypips.com, go to tools, and then from tools, here you have position size. And I've given the highlights. So if you are trading, if your total amount of money you are trading with is $100, and I say you expose 10% of your $100 to the market. Now, so if you look at this trade we were entering, or we entered, so that's USD chef. This USD chef we entered. So we say stop loss is about how many pips? 22, 20, let's just call it 23 pips. So if within the range, so let's look at USD card. How many pips? 19 pips, okay? So if we look at, okay, I didn't go to SND. I say it should be selling. So, and you see selling, right? USD card. Okay, here is this. Okay, there's another one. AUD USD. No. AUD USD selling. So you can see, guys, my sell is still moving on. So, I told you that we actually missed it because look at all this fake out and all of that. It's a failed. Then from here to here already is money. So like 10 pips, when it came here. So now this is 27 pips. So let's take on average to be 30 pips. So you now say 30, put 30 here, and then you say calculate. Doesn't matter what instrument that is there. Now say calculate. So now what this thing have done for you is you are telling them that I want to only risk $10 out of my $100. So to still save $90. Now, you now say, okay, what you can trade with the considering the number of pip for your stop loss, the lot size we can allow you to use is 0.0333. So if you look at it logically, if you're using 0.01, that means you can open 3 positions. Then if you're using 0.02 and 0.013, so you open 2 positions. So with that, now what you have done is, if you have done that, when the market start moving, the first position, the second position, so the first position will go to TP1, the second position will go to TP2, the third position can even go above the last TP.
Oh, hello, sir.
Yes.
Hello. I mean, this baby, your baby peeps calculation. Can you come again?
Okay.
Confuse me.
Okay. This is it. The calculation on baby pips is that that is my personal risk management I always give to people, because sometimes you will see people that are trading, they will say maybe a particular market they hit stop loss. They will now say their account get liquidated. And I always tell people, I said, if you have improper risk management strategy, that's why you cannot calculate how much you're about to lose. No, any trade I enter to, I already know how much I can lose when the market go again. Yes,
Yeah.
any trade you enter to, you don't know how much you are going to lose if the market is against you. That means you are gambling. That's the reality. And that's why when you lose, your psychology is lost. You are now struggling. No, I don't do that. And I said, this is the point. If the whole equity you are trading with $100, now you know the smaller your capital, the higher the risk you will take. Because if your capital is big,
Yeah. You're right.
You will not risk much. All right, you will not reach high percentage. So that I don't still believe in most people say risk 1% of your equity. I say it's not true. It depends on how much you are trading with. So with that, if you are trading with $100, you are risking 10%, for instance. So how do I calculate? You go to baby pips, you go to tools, you now go to position size calculator. Yeah, there are so many risk management measures that are here that you are supposed to use. This is where you now know who is actually doing business and who is gambling. Now, position size calculator. And I said, if you are trading with $100, you are risking 10% of your money in your trade. So if that's the case, you have to type that your 100, that's your capital. Now, that's your capital. How many percent of this your capital do you want to expose to the market? You now say it's 10%. You type the 10% here. Now, if it's 10%, you want to know. So now your market you are entering into, and most people, when we send signal with this our ruler, they will say they don't understand. And I told them, I say, you already told me that you are not trading with risk management, because that ruler is supposed to even help you to do proper risk management. So because this is, if you look at it, this is 27 pips. I just say, okay, on average, let's say most of the trade you will actually want to enter to, your stop loss is at okay, so your stop loss is at let's say 30 pips. So in most cases in gold, it can't be 30 pips. It's mostly going to be 50, 100, 200, 250, depending on how you trade. So you now say, okay, on the average, my stop loss on the average. So you are saying your stop loss, and in fact, one of the factors again is that when you are trading with small money, your trade you are going to enter to, your stop loss will not be too bogus. So be average of, if it's capping of currencies, will be average of 10, 15 pips to maximum of 30 pips. But if it's swing trade,
Okay.
average of 30 to 50 pips if it's currency, and sometimes can even go to 100. Okay. So now you have to ascertain, okay, what's the average stop loss? I want to, anything more than any trade that is more than this stop loss, I'm not going to take it, because that means you are exposing yourself to too much risk. So now you now say, okay, it's 30 pips. Now, once you say 30 pips, you want to now know which lot size will I use to enter the market. Okay. So that's when you now say calculate. So as you calculate, it has told you that, hey, Oga, since you can afford to risk $10, the $10 is now the seed that must die. Now, since what we consume this $10, you say is 30 pips. They say the lot size you must use to now get that calculation right, to lose that 30 pips, right, is 0.0333. 0.0333. Now, imagine you are entering the market and you are now using 0.05. What risk justification do you have to use that? So when the market hits about 30 or 50 pips loss, man, your $100 is already divided into two. And you can't give account on how it come to that point because you were not meticulous. Okay? So that's why you calculate this. Now, I have done this calculation over and again, and I said, for those of us who are trading, like who are on challenge account, okay? So those of us who are on challenge account, what I said was that I use, we have changed over light to, okay, sorry, I think it should switch over to another this. So and I said, those of us, like, let me use a case study of $50,000. And in fact, one of the lovely things that I cherish, but that's what most people are even complaining about, all of those prop firm. One of the lovely things I cherish on prop firm is this. It's a training ground, and many people do not know. It's a training ground because Adan said, you can imagine the kind of now conditions to you on prop firm. Just apply it to your personal account, both in your forex, in your synthetic, in your futures. I can tell you, you will build that account very well because you will not be like a Dassica. Now, the point is this, like those people who have account on Traders Mastery. If you look at it on Traders Mastery, let me use an example. Some people bought into that promo account, right? Promo of, let's say, $50,000. So $50,000, the prop firm said your overall drawdown or loss should not exceed 10%, which means 50K, 10% is $5,000. Now, then they say your daily drawdown or losses should not be more than 5%. For me, I would say not up to 5%, because the moment you hit 5%, you are cut off. So that means should not be up to 5%. That's okay. Now you are giving 50,000 account, and they said your daily drawdown is 5%. That's 2,005. Now, when you are going to do your risk management calculation, You don't put the $50,000 here. That's why many people fail and blow up their challenge account. What you are supposed to type here is that your daily drawdown that they say you should not hit. If I put my daily drawdown here, and I said you can now risk, maybe you can risk 10%. Some people are very, very risk averse. They can take risk so much. They can use 20%, but what I recommend is 10%. Now, if it's 10%, let's say you are trading gold. Because if you are trading gold, your stop loss level on gold, so you can see the DXY is not getting strength at all. That's why you see that scalpers are making a lot of money, because if it were a scalper, all this while they will have taken some profit, you'll find another one and all of those things. So now let's say you are look at gold, for instance. Now look at gold. Now, if you are entering gold, all right, when we came, gold was somewhere here. Yes, gold was somewhere here. So let's say you were taking gold from where it was here. Now, your stop loss, maybe this is the previous swing low. Now, if you take that, your entry here, and your stop loss is here, below here. Now, this on gold, this 9.44 is 94 pips, right? If you extend it down here, this is 196 pips. So now let's be reasonable, but not everybody can cut gold, what's it called? Pips in his stop loss. So now this is 130 pips. So it's moderate enough. Now 1:2 of it is invariably going to be close to this swing low, swing high. If you look at it here. So, but this is it here. Now, this is your 1:2 if you enter when we came here for gold. Now, this is the issue here. The issue is very simple. Now, you are doing your calculation to do your risk management calculation, 130 pips. You now go to your position size. How much is your daily drawdown? 2,500, because you are trading with $50,000 account. So how much is your exposure? 10%. So 130 pips is your stop loss. Now you calculate. So now look at it. He said, because you say 10% of 2.5 is $250. Now, that $250 is 0.5 of your overall money. Go and calculate it. $250 is 0.5 of 50,000. So while 500 is 1% or so. So if that is the case, now this is what you are now doing. You said, this guy, I'm going to risk 250. And that's why I always tell you the minimum risk reward I want is 1:2. That is, I'm risking 250 to make times 2 of it, which is 500. If you lose a trade, you lose 250. If you win the trade, you make 500. But if you don't calculate that way, you're just trading anyhow, you can't give account of how much you made at a particular time. And so when you make loss, it's going to be bogus that it will now be like 1 leg forward and 10 leg backward. So now 250 is this. Look at the loss side they say you should use. 0.1923. So you can now decide to share this 0.19. So average of less is 0.2. So if you are now saying you are going to use 0.05 in 4 places, you are still within this range. So it means when you are now entering market and say this is good, you enter 0.05, 0.05, you can enter 2 or 3 positions at a go. And then when the market pull back or continue, break another structure, you now want to add and all of that. Okay? So, but you have already told yourself that, okay, what was my calculation here? 0.1923. So we'll say approximately 0.2. You have divided into 4 portions. 2 or 3 portions already taken. You already know that what's remaining is just 1 portion. So when the window of opportunity of buying into more, you only enter the remaining fraction. Once that is done, no matter what's happening, no matter what they're saying, you don't bother. You monitor that trade to close in profit. If you have energy to go again, you go. If you do not have, you forget about it. So that's how. So at the end of the day, when the market is going to, if you didn't hit your stop loss, what we expect you to have at the end of this trade, minimum is $500. Okay? So that's exactly how the whole deal works. Okay, so let's go and watch out to see which market is thinking. Okay, USD card. Okay. What is this one? Aha, you can see that this guy has started reacting. Remember, I told us here that was US 30. Was it down here? We did our calculation. I think it was here or in the other side. I think it was here. Sorry, just a moment. Okay. That should be. Okay, so I think I was doing calculation on US 30 not long. And Euro USD, okay, it was the other page. And so Euro USD was already reacting, so it was the other page, okay. Okay, so ladies and gentlemen, that's how it is. So when you now want to like make your indicator to be available like moving average, you only use this to support your trend. So that's not what determines your entry. Use it to support your trend. So if you don't do all of these things, I tell you, you can trade, you make profit, but you waste it again. That's why I would say one leg in, one step forward, and 3 steps backward. It's not helping matter. You will make $1,000 yesterday, and today till the next 4 days, you are losing $500. It doesn't make sense. All right, so ladies and gentlemen, that's also, but like I told us on those of us on the other group, I said a market is choppy, is dicey this week, so you probably want to avoid some trade unnecessarily. All right, guys, so thank you. Do you have any question, anyone? Do you have any question, please? Any question? Any question?
Hello, sir.
Yes.
Yeah, please, the USD card we're trying to look at.
Yes.
Sorry, I think. Yes, sorry, it was the AUD USD.
Okay, AUD USD, okay.
I couldn't get that parameter where you expect it to break before we can add our positions. Because actually, I entered the small one while you were doing the analysis.
AUD USD. Okay. Okay, for the sell, we sold it now. You sold, right?
Yes, sir. Yes, sir.
Yeah, I said AUD USD because DXY can misbehave. So if it does misbehave, you see the AUD USD jump back and come to get rejected here. Now, then you can stack more position. The other side is this low. If it breaks it and now retest it, that is continuation. That's where you are now adding again. So two ways of adding was that a pullback and rejection here, you are adding. It breaks below this point because at this point, when it breaks below here, you're already in profit ordinarily. And so you wait for a pullback to that point and reject, then you are adding more position. Now, good thing, when you now add more position, the market probably when it get down here, you will have been in good profit. Perhaps you want to close that one. The one you enter earlier may be what you continue to protect because it can still withstand because it's in much profit than this. You get it?
Yeah, thank you very much, sir. It's clear. It's
Okay.
clear, sir.
Yeah. And like I said to all of us, even if I have time, I can come online anytime in the midnight. Either I come online or not. Get used to that midnight trading. If you can master those strategy I taught us, you will be more refreshed. Because if you wake up maybe like say that 12:30 a.m. or 1 a.m. or 1:30 or 2 a.m. and you trade till like in the next maybe 2 hours and all of that, because actually Asia session is less noisy. And people call it a range market, but not all market actually range in that time. So if you trade in that money and you have made some reasonable profit, so if on the day break, you use the day for another thing. All right. And or if you now find you will discover that if you trade the midnight, you're already in profit. When you are trading the daytime and you made a mistake or you encounter some loss, it will just take part of the more profit you have made in the midnight before even the day break. These are the advantages. Okay. So that's what it is. Okay. USD card. Okay. Okay, no, not USD card. I think AUD card. No. So if you imagine my scanner already pick it, this is already much money. And then after another rally, a massive one, the strength service exceptional. Okay, guys, thank you very much. Let's have a nice rest. I told us the USD chef, you need to take out this high. Once this high is taken out, our journey up here will be smoother. All right, guys, so do have a nice rest and good night.
Thank you very much.